Guys, welcome back to another week of Mortgage Matters in Minutes here, sponsored by Mortgage Specialists. I'm Brent Rasmussen, your regular weekly host, followed with Jonathan Jameson here in the next week. Just wanted to cover some important economic data and information that we've been speaking about with many clients here lately. And we thought we'd talk today about how recessions and what happens with real estate and interest rates happen before, during, and after a possible recession. And I know the big conversation we've had here recently is the talk of inflation. And as we've seen inflation, things obviously will change. And many people have been speaking that we're in a recession, we're soon to be in a recession, or one is coming. And we thought we'd share some data and some information with you that we see that will maybe help you understand and make a decision that's good for you and your family, whether it's waiting to buy a home or whether it is executing and purchasing that home currently on a contract. So I'm going to turn over the screen today here for our Facebook Live viewers or Instagram viewers. We might send you some pictures via online, but I'll definitely still talk and chat with these as we go as well. But the first slide we're going to see here, and I thought they were very easy slides to understand. Even if you're not a great understanding of all the numbers of what's happened over time, our first slide here goes into unemployment rates and recessions. So you can see, starting back to 1950 on this chart, going all the way to 2020, we'll see this white line. This white line signals unemployment rate. And what has been proven, and as we can see from this chart, as we see all-time low unemployment rates, a recession shortly follows after this. So if we go back to 1950, we can see in this dark blue line that's vertical, in comparison to the white line, the recessions. We've seen one in the 50s, 60s, 70s, 80s, early 90s, and obviously the latest in 2008 and 9. So what we are seeing here is that bottom line, that white line, hits the lowest unemployment shortly after a recession goes into effect. And we've been at all-time low unemployment now for the last few years. So obviously you see at the end of this chart here in 2019 and 2020, this enormous spike. And that enormous spike obviously was because of the pandemic and COVID. As you can see, it's came back down back to our normal lines there. And so we are predicting a recession to happen. So when people hear the word recession, they get very nervous. They don't understand many times how housing and interest rates are affected during a recession, because the big thing that we're seeing on this chart as recessions go into effect, unemployment goes high. People lose their jobs. And when that happens, it spirals out of control and sometimes gets to be really major. Sometimes it's just a short blip on the radar. It doesn't always mean a major detrimental effect to the whole entire economy, but sometimes obviously it does have a blip, and we've seen that here recently with the stock market taking a little bit of a blip. But our second graph that we're going to see is housing staying strong through a recession. So again, we know how the market's been. People have been stressed trying to find properties, trying to find real estate, and making the best decision for them and their family. It's been very challenging these last couple of years if you don't have a lot of money to exceed the sales price to get after and get into a property. But many people are waiting and saying, I'm not going to purchase a house this year. I'm going to wait for prices to decline once interest rates go up. We've seen interest rates increase. We've seen them increase 2.5% this year already, but we have not seen home prices even flatten or lower. So this graph here, if we look from left to right, shows the S&P Case-Shiller U.S. National Housing Price Index. So what this is an average of home prices and what they're doing across the country. Obviously, real estate is local. So here in the Midwest is different than it is on the coast. North and south is different. Every little area broken down to even the subdivision is how specific real estate can operate. But as you can see, the home prices throughout time have gradually increased. You also can see during these dark blue vertical lines again, the white line, you can see home prices have continued to hold their value, if not increased, during a recession. And that's why many people believe in having investment properties and having multiple properties, is that during these times when maybe the stock market doesn't do as well, housing increases value, or at least holds true value. And so we're seeing all through the 70s, 80s, and 90s, except for that blip there in 9 and 10. That was a little bit different, and the housing market actually put us, the lending and the real estate environment put us into a recession. But that's really been the only time that we've seen values diminish during a recession. Going back to, the early 60s, we see a little bit of a flattened line there, but you can see in the 70s, 80s, 90s, and even this last 20 during the pandemic, home values held strong through a recession. They continued to keep value, if not increasing. So many people that have stated this last year or two, I'm going to hold off to see home prices come down. Even in here locally in the Omaha metro area, we don't see home values, and we haven't seen home values decrease. And that's something that people are anticipating because they want to happen so they can afford a home. But this is the true education that we want to give our clients of what is truly occurring and going on. The last slide, what people mostly want to talk about is what are interest rates going to do? And I can tell you we've been a huge proponent of letting clients know and letting the industry know here that rates will come back down. I know rates have increased. We've talked about that earlier in this video session, that rates have increased by as much as 2 to 2.5% this year alone. But what we've seen throughout history is once a recession kicks in, interest rates decline, diminish, go down. So we can go back to 1980 here. And again, the blue vertical lines are our recessionary periods. White is the mortgage interest rates. And what we're seeing during these recessionary times is that interest rates have increased at the beginning of the recession. But in order to get out of the recession, the Fed have to step in and lower interest rates to stimulate spending, stimulate the economy moving forward. And through all of these times, we're seeing, in the early 80s, rates came from 16 down to 11.75, late 80s, 18% down to 13%, early 90s, 11 to 8.75. We've been seeing these historical standards happen over and over and over again. The last one, 2009, rates have diminished and decreased. So while people are very nervous because we've seen interest rates increase, we are anticipating that here in the very near future, once inflation gets stabilized, obviously we might see a recession. I think we will, and interest rates will come to fruition. I like seeing charts. I think they make a lot of sense. I think they're more understandable for people to see what history, because it does repeat itself, shows for the economy, shows for housing, and housing has always been strong. Really, we are at such a low inventory. We are down in the Omaha area 3 million houses. So if we are able to catch up with those properties, we would be much better off in a more buyers and sellers equal market, I guess I should say. So I can tell you here from our office, we have many, many, many clients that are pre-approved that have been for 2 to 4 years that just have not been able to either afford home prices, come up with a down payment, or be able to outbid someone because of the prices going above. So while people are very nervous that we're going to have some kind of a housing downturn or some kind of correction in home prices, I can, in my opinion, rest be assured that's not going to occur. If home builders could all of a sudden massively expand the building that we've been catching up on since 2009, maybe, but there's no there's no prediction that that's going to happen. Even with spec builders coming into Omaha, we don't anticipate that the housing shortage is going to catch up anytime in the near future. Can we see rates at 9, 10, 15%? I don't think so. If we did, maybe will we see that buyers and sellers equaling out, correct? But people still need to live somewhere, and not everyone wants to always rent a place for an extended period of time. They want to own things, and we've always seen this when it comes to housing. Home ownership is important to families. It's important to neighborhoods. It's important to communities in the city, and we're going to continue to find ways to make this happen. But the point of today's short here time we've been together is talking about how the recession if it goes and when it goes, how the housing market and interest rates are affected. And we've seen that through these statistics. And hopefully you're able to educate yourself to make the best decision for you and your family. So we appreciate you checking in with us every week with the Mortgage Matters in Minutes. Obviously, we have many blogs and yet information on our website at mtg-specialist.com. You can phone call us at 402-991-5153. Or you also can check us out on Facebook, Instagram, LinkedIn, Twitter. We're on all the above. And please check in, like our page, subscribe so you can check in with these weekly updates for you, for housing, and real estate, mortgage, interest rate talks each week. Hope you all have a great week. We'll talk to you here very soon. Thanks. Mortgage Specialists. Driven, trusted, reliable.